All right, so my name is Meling Montelongo, and I am a licensed title agent and managing partner over at New World Title. I've been in the business for a little close to 20 years, practically since birth. My mom, a very influential real estate mentor in today's industry, once owned and operated a Century 21 franchise and a reputable title company, Colonial Guarantee and Title. If many of you have been in this business since 95, you may know the name. It may sound familiar to you. However, being exposed to the real estate life at a very young age, it was only a matter of time before I started my own journey as a title agent. That said, I have lived, witnessed, and worked through several different markets. Three things I have learned throughout my career, and I'm going to share with you, and this is something I share with all of my agents. It's a part of my value proposition to my real estate community, is setting proper expectations, communication, and knowledge are essential to a successful closing. Today, I will be presenting the contract from a title agent standpoint. So I know that there's other trainings on the board that will give it to you from an attorney standpoint. You get contract classes from a broker standpoint. So today we're going to talk about a title standpoint and why is it important to know all three standpoints in this industry. As a title company, our main goal is to issue a clear marketable title while also facilitating a successful closing. There are many moving pieces throughout the closing process. Essentially, as title agents, we represent the transaction. Therefore, one of the reasons why we host trainings such as this one is to ensure that deals get to the closing table with ease and with the least amount of roadblocks as possible. Our agency has a strong attorney network with several attorneys readily available to help agents review contracts and answer any legal questions they may have on them. For the most part, in my personal opinion, being in the business for a little over 20 years, the contract is pretty straightforward. I've broken down the contract class based on certain sections that agents should study. Yes, study. We have homework and have a good grasp on. Once agents have a better understanding of these terms, the rest of the contract and the standard provisions are pretty easy to follow. So there's standards on the contract and there's different provisions. I like to refer them to as like the glossary of the contract. So let's dive in and discuss the most common parts of the real estate contracts agents need to know. I'm sorry, I didn't even have this on full screen, so let's do that. So the first part of the contract is your page one, okay? And if you could see, I have ironed out certain sections in yellow and certain sections in red. And the reason why I've done that is, again, on a title standpoint, it's important to know what it is that we need to look for when doing the contracts. One of my biggest pet peeves when I was processing a file was the buyer section. And rule of thumb is, however the contract is written, whatever name is written on the buyer side, on the buyer section, will be the name written on title. I hope that makes sense. I'm going to open up the chat real quick just to make sure if anybody has any questions. So the best suggestion that I can give to agents when it comes to writing the buyer's name is ask them for a copy of their ID. Ask them, is this how you'd like to take title? Because if the name is incorrect, title will be incorrect. And it used to happen a lot where before dot loop and everything was handwritten, we would get to the closing table and the buyer would say, well, my name is not Jose Perez. Well, Jose Perez is how it's written on the contract. No. My name is Jose Angel Perez. So essentially what ended up having to happen is we would have to get this package back, go back to my desk, redo everything, reprint everything out just for it to say Jose Angel Perez. And it was financing. Imagine you have to go back to the lender so that the lender can add in that name. So rule of thumb, and I know everything now is very electric with dot loop, DocuSign, and all the fun shenanigans. Ask them for a copy of the ID and ask them if this is how they would like to take title, and make sure that it's spelled correctly so that there's no issues when it comes to to the title and the closing documents. The second portion is property description. I think this is pretty straightforward. I love copy paste. Probably shouldn't say that, but copy paste is my favorite feature in the whole wide world, because you can copy the information right from the tax collector's website and paste it onto your contract so that you're not missing a number, or you're not doing 4506 and it's 6506. Like, you're not reinverting numbers. When it was handwriting, it was a lot of that, you know, gosh, what is this, a 0, a 8? So use copy paste, especially when it comes to drafting the contracts, the legal descriptions, and just admitting people in. Sorry, guys. All right, let's go down to, Let's go down to section 2 of the contract, which is purchase price and closing. I've boxed out lines 29 to 34 because it is important. It is very important when it comes to your escrows. I don't know if anybody on this training has ever been through an escrow disbursement order. It's not fun, a lot of back and forth. This is really where you have to pay attention to your contract. There's certain terms on this contract that have everything to do with the escrow. And the worst thing that can happen to a real estate agent is not going through the contract and reading the provisions and understanding what each provision means, and having a buyer lose that deposit. It's detrimental, because now not only have you lost the trust of the buyer, but you probably lost the client, granted, and referrals from that client. So in essence, the contract already gives you certain options to initiate an escrow deposit. You can accommodate the offer, or it could be made within X amount of days. If you leave this part blank, it's automatic 3 days after effective date. Now, we all know that the effective date is the date of the last dated signature of the contract. My suggestion as a title agent is this: wire the escrow deposit, especially now during the world we're living in, where checks can take up to 7 days to clear. Cashier's checks can take up to 7 days to clear. And if time is of the essence, wire is always the best form of initiating an escrow deposit. Not only that, you have paper trail. You can the buyer can initiate the wire, and you already have a wire confirmation that you can send into the listing agent as proof that they went and they made that deposit. So does that make sense? I'm opening up the chat right now to see if there's any questions. Does that make any sense? And I know that, and the reason why I'm stopping here to ask any questions is because escrow is an important topic. Let me lift up my screen here a little bit so we can see if there's any chats. So nobody has any. We have one chat here. Yes, makes sense. Okay, awesome, perfect. So super important to make sure that you have that escrow deposit turned in on time. Closing date. All right, this one's my favorite topic, and I know I always get some pushback when I talk about this section with some brokers. So Andres, I'm gonna unmute you for this one so you can give your opinion as the broker of record. Let me find you, unmute. Okay, so Andres, I've unmuted you so you can give your opinion on this. Now, as a title agent, okay, the closing date is always super important because we need to know when we're going to go ahead and close the estate, right? A lot of agents got into the habit of using on or before a certain date. As a title agent, believe it or not, that on or before phrase can really put a damper into a closing. So let's say, for instance, a seller is ready to close before a closing date. That seller can call us and say, hey, I'm ready to close. That's fantastic. You're ready to close. But the buyer's not ready to close. Well, the contract is interpreted that says on or before the closing date. So I want to close before. So that term can really start giving a bit of a roadblock into your closing process, into your closing time frame. Because yes, one party may be ready before, but then the other party maybe not. Same thing goes where if a buyer is ready to close before the closing date, but the seller isn't. Buyer may say, well, my financing's in line, and guess what? My lock-in rate expires tomorrow, so I have to close by tomorrow. Seller, you should be ready. Seller may come back and say, well, I'm not ready to close. I haven't even moved out yet. I haven't even found a rental. So to fuse that from happening, because believe it or not, guys, that has happened and it can happen. So that term honor before, you need to be very careful on how you want to use it. And I usually divert back to the brokers as to how they want to train their agents on the best way and the best course to use an honor before on a date. I always just suggest go with an actual date on your contract, an actual closing date. Put the actual physical date on there. If you have to extend it, go ahead and do an addendum to extend the closing date. Here's another tip. Closing dates, and again, this is from a title company standpoint. Closing dates, best days to close are Tuesdays through Thursdays, okay? And I'm gonna tell you why, because I always have everybody always asking me questions like, why Tuesdays and Thursdays? Mondays are always hectic days, always hectic days. Lenders are always trying to get caught up with all of the fundings they had on Friday. So Mondays, usually for whatever XYZ reason, it's always pretty much a delay. Tuesdays, Wednesdays, and Thursdays are usually the better days to close. Now, it's not only so much of the lenders being so backed up on Mondays, it has a lot to do with wire cutoff time. Okay, we live in a world right now where back then I used to do closings. Homeowners would give me the cashier's check and I would be able to give them the keys and call it a day right there in the closing table. You give me a cashier check, here's your key, here's your package, call Mendes Movers, you're on your way, happy painting, happy moving, happy life, right? Not in today's world. In today's world, people now do mostly wire, right? So now that the wiring world has come into play, essentially what happens is there are wire cutoff times. And every bank has a different wire cutoff time. Some wire cutoff times can end at 12:30. Some can end at 5:30. Thankfully, New World Title, our bank gives us a wire cutoff time till about 5:30. So that's amazing. We can receive and disperse up until 5:30. But most sellers, believe it or not, their bank may have a wire cutoff time of 1 o'clock. So we have to keep in mind that if you're closing on Thursday at 3 o'clock and the bank has to still go through the funding process, the funding authorization process, you may not have, or a title company may not have a wire confirmation, not a wire confirmation, a funding authorization till maybe 5 o'clock. At 5 o'clock, we're sending the wire to the seller. But what happens if the seller's bank wire cutoff time was 3 o'clock? They may not be getting their funds to the next day. Chances are they may not want to release the keys. So it's important. These are important tips to keep in mind. And let me see if there's anybody else on here. Keep in mind and just kind of note down when you're looking at closing dates and closing times. Fridays are probably not the better day. Let's say, take this same case scenario. You're closing on a Friday at 3 o'clock. Funds aren't dispersed until 5. Is the seller going to give the buyer the keys if they don't see that they have the Benjamins in their account? Most likely not. Some listing agents may accept a wire confirmation as proof of exchange of funds. Any questions on the closing date? I'm looking through the chat right now. Any questions on there? On that before I go on to the second page? All right, I'll go on to the second page. No, okay. So the second page is broken down to page 2 on the left side and page 3 on the right side. And if you can see, there is a lot of marked up. There's a lot of information on this one. So, and the reason why I do it this way is so that everybody understands certain parts of this contract. I know it seems very overwhelming, but I promise it is super, super straightforward. And this is the part where a lot of agents start getting, confused, or maybe they don't understand too well, or they may lose a deposit from these sections. So we're gonna start here real quick with lines 58 to 60. Someone else just joins in. Let me just let them in right now. Okay. So you have here lines 58 to 60. Okay. We are living right now in a force majeure situation, believe it or not. If in the event of a force majeure causes services essential for closing to be unavailable, including unavailability of utilities or assurance of hazard, wind, flood, homeowners insurance, closing date shall be extended as provided in Standard G. So Standard G is one of your provisions. Okay, there is a section of the contract that outlines all of your standards. Think of your standards as your glossary. Okay, and we are going to get into that a little bit more into this training. So rule of thumb for agents, when you see Standard G, when you see any provision that says Standard G, Standard E, Standard F, go back to the contract and read it. Because on this force majeure, believe it or not, you, depending on the situation, depending on where the financing is, your contract may be extended for 7 days up to 30 days. But you have to read it and you have to know what these terms are. You have to be able to interpret this to your buyer or be able to interpret it to the seller so that they understand, hey, listen, this is a force majeure situation, okay? The new contract, which is the contract we're looking at, which was reestablished back in 2017, added 7 days. Before it used to be 3. So now it's added into 7 days, okay? Let's talk about real quick, going down to post-occupancy. Pet peeve number 2. Pet peeve 1 is not turning in escrow deposits on time. So please turn in your escrow deposits on time. Pet peeve number 2 is not turning in is post-occupancy agreements. Now, post-occupancy agreements are important for us as a title agent. Why? Because on the HUD, guess what we have to collect? We have to collect prorated rent, okay? If you're sending a title company a post-occupancy agreement the day before closing, that may delay your closing. And the reason being is if your buyer is financing, they are receiving a closing disclosure 3 days before closing. 3 days. So in essence, if there is going to be a type of post-occupancy agreement, meaning that the seller needs more time to pack and move, and between the buyer and the seller, they've agreed that the seller will remain in the house for a period of, I don't know, 7 days, 14 days, and pay the prorated rent to the buyer. Obviously, that's buyer's money. That's cash to the buyer. The title company needs to know this way ahead of time, not the day before closing, not the day of closing, because now this credit is not on the HUD. And if it's not on the HUD, guess what we're not doing? We're not collecting. So it's very important that if there is a post-occupancy agreement, or if you are working with a buyer, talk to the listing agent, ask them, hey, listen, there is a section on the contract that talks about post-occupancy. I want to make sure that we're not going to have any issue with the seller leaving the property on time or on the closing date. If you feel that the seller is not going to be ready, why don't we just start going over and discussing a post-occupancy agreement right now, so we don't have any issues later on at closing. We don't have any issues with the collecting. We don't have any issues with letting the lender know or anything of that sort. So please really take a look at and start asking those questions, because we've had a lot of closings, believe it or not, where we've had to just go back to the lender and saying, listen, I mean, what do we do? Now we have to get this whole HUD reapproved, and they approved it 3 days ago, and now we're closing, and it just puts a damper on your closing situation. Okay, so just kind of put that out there. I know a lot of people may not talk about it, but as a title agent, I do talk about it because I like to provide solutions and close my deals on time. So when I see things, I'm like, yes, it was on the contract, it was on there, should have read it. All right, now let's go down to the nitty gritty and talk about financing. All right, this is where back in 2017, the bulk of the changes happened. And it's very important that we pay attention to this section here. And if you see, I put a lot of red underlinings because I want to point out certain topics or certain language that's on the contract, where when you are in a escrow disbursement order situation, believe it or not, a lot of the attorneys, they come back and they revert back to this section here. Even our attorneys revert back to this section. So the first thing is section A, line 82. Buyer will pay cash for the purchase of a property at closing. There is no financing contingency. All right, I'm gonna really tone in on this one. Really tone in on this one. If your buyer is purchasing a property with hard money or private money, private money lenders and hard money lenders, they do have financing contingencies. I have yet to meet a hard money lender or a private lender that will tell me, no, May, I don't have any contingencies whatsoever. I am just willingly, out of the goodness of my heart, going to give a buyer $350,000, and I'm not gonna ask for an estimate on the property. I'm not gonna ask for an appraisal. I'm not gonna ask for inspection. I'm not gonna ask for anything. There's no contingency. I'm just gonna give them the money. I have yet to come across a private money lender that'll just do that. If you are working or your buyer is getting a private money, do not check off buyer will pay cash for the purchase of closing. And I will tell you why. If you check this off, you send this over to a title company, their entire HUD, their entire file, their entire figures are going to be based off a cash purchase. What does that mean? There are not going to be any recording fees for a mortgage, and that is a cost to the buyer. Private money and hard money lenders will require a note to be signed, a note and a mortgage to be signed at closing. That needs to be recorded, meaning that there will be a cost for recording. I have come across a lot of situations in the past where all of a sudden we see it's a cash deal, then we're getting an email from a random person saying that they are the lender and we haven't sent them any information. Well, what are you talking about? What information am I sending you? My agent told me this contract is cash. No, it's not cash. We're giving them a private loan and it's at 11% and these are our fees. Well then, I guess my closing is gonna have to be put on hold until I now figure this out, redo my HUD. Now I have to get a closing package. So please, if your buyer is buying cash, sole cash, 100% cashy dungo, hard money, cash, then yes, you can check off section A. If they are getting a private financing or hard money, then you would revert down to section B, where it states this contract is contingent upon buyer obtaining approval of, you have boxes, conventional, FHA, VA, or other, okay? Other would be where you would put private money or hard money. Just let the title company know, listen, there is some sort of financing happening with this deal. This way, when the title company is doing their HUDs and their preliminary HUDs, they're already accounting for mortgage fees, recording fees, or any other private lender fees in their estimates, okay? The red part right there, where it says describes loan within however many days, if left blank, that's the day you need to put for your loan approval period, okay? Let's talk about loan approval period for a quick second. Before this contract changed, it used to be called a loan commitment, okay? And this is just giving you a little bit of history so that you understand why these changes took place. Before it stated loan approval, it was loan commitment. Loan commitment was nothing more than a list of conditions that the lender required in order to formally approve the buyer and financing the property. Some conditions can be proof of income, bank statements, taxes, verification of employment, any condition that they need to meet. What was happening is that lenders would issue a loan commitment within the 21 days, which was standard back then. And 2 days or a day before closing, all of a sudden, one of these conditions wasn't able to be met, whatever it may be. Buyer's verification of income, of employment wasn't verified. So deals were canceling and buyers were taking advantage of, well, I don't want the property anymore. Let me just, get a loan approval denial. All it is, it's a loan commitment. It really wasn't saying that they were approved for the loan. So back in 2017, the CFPB said no more. We need to make sure that these deals are either approved or not approved. So they changed the term loan commitment to loan approval. Now, if you're leaving it blank, then it's presumed that your loan approval will be done within 30 days after your effective date. This is where you have to have a very strong, close-knit relationship with your loan officer or your mortgage professional, where you can have a very open-ended conversation and saying, hey, listen, I need you to give it to me real. I need you to tell me if you can have a loan approval within 21 days. And if you can't, I need to put however long it's going to take you to get there, 30 days, 45 days, whatever day it is. By the time that your buyer is getting into contract, your loan officer should already have pre-approved or done the pre-work with this client so they can be able to tell you, listen, you know what, Andres, I can give you a loan approval within 25 days because I already did all the preliminary work ahead of time. We've already done everything else. So now we're in contract, I can give you a loan approval in 25 days, okay? So very important that you talk to your loan officer and get the correct date and make sure that they are already ahead of the ball game. Your loan approval date, if you notice, it'll say if left blank, then 30 days after effective date. So you have to make sure that your loan approval is on point, okay? Another point or another tip that I've recently been giving to my agents is on line 89, you see where it says here not to exceed a certain percentage if left blank, then prevailed rate based on buyer's creditworthiness. All right, believe it or not, I have been able to save a few deals where, and especially now during COVID, and again, this is me being preemptive and just going over the contract and trying to provide solutions for my agents to save their clients and their livelihood, of course, where one of the rates would say, all right, 4.75, right? And because of COVID and everything that's gone on, obviously the rate is no longer 4.75. Rate changes now. Now rate changes based on your credit, everything going on with the banks, everything going on with the world. Well, in this in particular case, the rate increased from 4.7 to 7%. Although the buyer was still approved, at 7%, the buyer's like, there's no way. Like this is just like increased my mortgage payment by X amount. No, I can't do this. I need to back out. Well, how do you back out if you have an approval? You have everything ready to go. So they went back to the contract, and thankfully that agent had put 4.75. So guess what ended up happening? Because the loan officer put in the letter and saying, hey, listen, we're giving you a loan denial because the rate of the buyer increased from 4.75 to 7, he can no longer afford this house. The buyer was able to get back the deposit. So rule of thumb, use that section to protect your buyers, because it can help in certain situations, okay? So I know a lot of people don't talk about that, using the percentage, but it is something that you might want to consider now implementing. And I leave that to Andres to guide his agents on how he wants to use this section to the advantage of the buyers, and obviously to the sellers and keeping the deposits. All right, let's go down to section 92 to 94. All right, I need everybody to pay attention to this one. It says, after effective date, buyer shall use good faith and diligent effort to obtain approval of loan meeting the financing terms, loan approval, and thereafter to close this contract. I circled good faith and diligent effort. That means that your buyers, mi gente, this isn't let me get on contract and go on a cruise and never talk to anybody again. I'll let everybody figure it out. No, that's not how this works. There are certain things that their lender is going to need from them. And if a lender cannot meet the loan approval guideline, the lender may just come back and say, listen, my buyer didn't use good faith or diligent effort in any sense of the word. So how was I supposed to give them a loan approval if I'm still waiting for their taxes, if I'm still waiting for the verification of employment, if I'm still waiting for certain documents for them to give to me? So it's important to go over these sections with these buyers and let them understand and know, hey, this isn't just sign the contract and hand it over to me, agent, and I do everything for you. No, there's certain things that you have to do too. There's certain contract contingencies that you need to help me help you so we can get the closing done. Does that make sense? Because I know sometimes that's a little bit kind of like, never heard of that section before. It's there, guys. Diligent effort and good faith, okay? Let's go on to the red sections, line 95 through 98. Buyer's failure to use diligent effort to obtain loan approval during loan approval period shall be considered a default under the terms of this contract. I think that's pretty important for buyers to know. I think so. I think everybody should give me like a thumbs up on the chat so that they all agree that this is important information for buyers to know. For purpose of this provision, diligent effort includes, but is not limited to, timely furnishing all documents and information and paying of all fees and charges requested by buyer's mortgage broker and lender in connection with buyer's mortgage loan application. This is huge. And I don't know if you all practice going over these terms of the contract with your client. I'm a big believer in setting the expectations, and with terms like this and contracts like this contract, remember, this is a legal binding contract. There's money on the line here. It would behoove agents to say, listen, I am going to send you the contract via dot loop, but before you sign and before you initial, I need you and I to get into a Zoom call or conference call, whichever way is easiest for the clients and for the agents. And we need to go over certain sections of this contract. I want to make sure that you understand what this contract means and what we need to do to work together as a team to make sure that we get your closing done. Because I am almost probably 95% positive that a lot of agents are not discussing lines 95 through 96 with their clients at all. And it's huge. It's huge because if the lenders are going to protect themselves the same way you're going to protect your license, the same way I'm going to protect my license. So if a lender is having a hard time getting a loan approval, and you're coming to that closing date and your buyer has not acted in good faith and diligent effort, they need to be very well aware that they may lose their deposit because they are now in default of a contract. Make sense? Thumbs up. Makes sense. All right, moving on. Lines 99 all the way down to 108. I'm just gonna skim through it because it's a lot of content and a lot of information. So I'm just gonna give you the bare explanation of what this basically means. So number 2, buyer shall keep seller and broker fully informed about the status of the buyer's loan application. How many times has a listing agent been very frustrated and not being able to get any information from either the buyer, the buyer's agent, or the lender and saying, hey, what's going on with the loan application? Well, guess what? It's on the contract. Listing agents do have a right to ask follow-up questions. Hey, how are you doing with the buyer's financing? Buyer's agent, where are we with the financing? So if you want to be that agent that doesn't answer the phone or doesn't want to, be a team player, then great. Then you know what? To each their own, but revert back to the contract, because that listing agent may come back and say, hey, it says on the contract that I should be fully informed of the status of the buyer's mortgage loan application. You're not acting in your real estate capacity, and you're not acting ethically, if you will, because it's on the contract. You're not giving me any information. So essentially that section there was added on, and I think that's good because it opens the line of communication. 3, upon buyers obtaining loan approval, buyer shall promptly deliver written notice of such approval to the seller. Very basic, very standard, okay? Next section. If buyer is unable to obtain loan approval after the exercise of diligent effort, then at any time prior to the expiration of the loan approval period, buyer may provide written notice to the seller stating that the buyer has been unable to obtain loan approval and has elected to either waive the loan approval or terminate the contract. Okay. These are two options the contract gives you. I'm going to give you a third. Okay. In essence, basically what this provision is saying is that if come your loan approval date, let's say it's day 30, you put a loan approval date for 30 days, right? If come day 30, the loan officer has not been able to issue a loan approval, under the terms of the contract, it gives the buyers and the sellers two options. One option is to say, well, we're gonna waive the loan approval, meaning we don't have it yet, but we're gonna continue with this closing. We're gonna continue with it, with or without it, with or without it. Obviously, we don't have it here, so we're gonna go with it. Need to be careful with that, because if the loan approval, for whatever reason, is not done, if for whatever reason the lender is not able to get the financing, your buyer has just elected to waive the loan approval and move forward with the contract. Okay, let's listen to this one real quick. Or two, terminate the contract. Neither option, in my personal opinion, as a title agent, am I comfortable with. Because one, you don't want to terminate the contract. Maybe the lender needs 5 more days. Maybe the lender needs 10 more days, however many days the lender needs, right? Get an addendum. Have an addendum extending the loan approval period and extending your closing dates drafted for however many days that lender needs to issue a loan approval. Because the worst thing that can happen is that if you continue moving the contract without the loan approval, and for whatever reason, that loan approval is not within the budget of the buyer, guess what the buyer loses if they don't close? Their deposit. And that is huge. That is awful. You don't want that happening. So if you find yourself in the situation where you're on day 30 of loan approval, and the lender just needs a few more days, extend the loan approval date and extend the closing. Does that make sense? I'm going to stop here real quick to answer any questions on the chat. I'll give some time to write because I know these chats are sometimes. If the buyer is directly, okay, we have Juanos, nice name, Juano. If buyer is directly affected by COVID-19, should an addendum to extend the closing date? Yes, there is a COVID-19 addendum that you should already be including into your contracts. It would extend the contract closing date, and I believe it does have a stipulation on there of force majeure, and it would also extend the loan approval period. So I would definitely look into adding the COVID-19 addendum to your contract. Okay, let's go on to, let me move my screen a little bit over here. Is everybody seeing the screen okay? Okay, I see Andres nodding, so yes. Awesome. All right, so let's move on to the financing section over here on the top of page 3, where it continues to give you several options. If buyer fails timely to deliver either notice provided in paragraph 8B3 or 5, to seller prior to expiration date of loan approval period, then the loan approval shall be deemed waived. Okay, and again, these provisions here are all added provisions into what would happen if the loan approval was not provided within the time frame. So it's very important, and I'm going to send everybody a copy of this contract so you can keep it in your folders as like a rough draft that you can always look into. But I really need you guys to study this section here, because when you go into an escrow disbursement situation, this is the first section. Most attorneys, I know our attorneys, they look right into this section. They're like, all right, well, let's look at the contract. Let's see what the provision reads. Let's go ahead and put a timeline, The contract was executed on what day, it was effected on this day, this is the day that the loan approval start, this is the day loan approval period. Where is the communication? Where are the addendums? Where is everything that shows that we can go ahead and salvage the buyer's deposit as much as possible? So this section here, please read it, study it. It's really important when it has a lot to do with your financing and what it would mean if a buyer is in default, okay? There's a section here where it talks about seller being in default. If the loan approval has been obtained or deemed to have been obtained as provided above and buyer fails to close the contract, then the deposit shall be paid to the seller unless failure to close is due to seller's default or property related condition or appraisal of the property attained by the buyer. So they already give you 3 case scenarios that fall under either a seller default, a property related condition, or appraisal related condition. So it's important to read these terms and study them. Go over them with your buyer. Remember, as real estate professionals, our job is to help and be a real estate advisor to our clients, okay? Moving forward to section 9, closing costs and fees. One question we're always asked as title agents is, who pays for what? Well, here's the breakdown. The contract gives it to you on a breakdown where you can already see what a seller would pay and you can already see what a buyer would pay. I'm gonna add in an extra tip here as a title agent where it's, you see where it says other and I have a red line through it. I want all my agents, mind you, notice how I said I want, not that I need or that agents should. I want all my agents to put their transaction processing fee on this line, okay? It is a closing cost. It is considered a closing cost. So if you have a transaction fee of $2.99, $3.95, $4.95, whatever fee it is that your brokerage has, please put it on there because it is considered a closing cost. Believe it or not, when title agents are looking at doing a preliminary HUD, we're going to this section. We're going to section 9 because we're looking to see if there's anything else on there aside from the regular standard closing costs that we need to collect. Is there anything else that we need to add on to our HUD? Okay, so get into the habit of doing that. Now, if you go down to title evidence and insurance, before I do that, any questions on closing costs or any questions on financing? Andres has a nice smile on his face. I think Andres has a lot of questions. No, he's good. I don't have closing fees in my company. All right, so you won't even need to do that. Awesome, Andres. Yes. We normally place it on additional terms. Yes, you could place it on additional terms as well. I'm a big believer and I'm big on putting it anywhere and everywhere. Oh, thank you, Laura. I'm very proud. Thank you. I appreciate that. To go back to Adriana, yes, I always suggest for agents to put it anywhere and everywhere. Put it on other, put it on additional terms. Most title companies have information sheets. I presume that they will ask for it. We do. Our information sheets are super, super in depth and in detail. We want to know anything and everything at the beginning. So there will be a third place for us to have that transaction fee. And again, you want to make sure that it's noted 3 times throughout your transaction. You don't want to come into a situation where, oh my God, I didn't see it, it wasn't on there, or I didn't know. Not only that, buyers can battle it. Believe it or not, buyers can battle it. If they don't see that there is a cost for them for $3.95 or $2.95 or whatever fee it may be, they may not think it's a closing cost. So when they see it on the HUD, they're going to be like, no, I've never agreed to paying that. Why would I have to pay it? It's not on my contract. Remember, your contract is your legal document. You want everything on here just to make sure that it's covered. Okay. All right, let's move on to title evidence, which is line 145 all the way down to 156. We're going to talk about real quick 154 and 156. This section here is new to the asis contract as of 2017, and it talks about, for purposes of this contract, municipal lien search. Okay, before back in the days, a municipal lien search wasn't necessarily a part of your contract. I'm just going to give you a little bit of history so you can kind of see why me personally, I'm kind of excited and I like that this part is on here. as a title agent, as a title company, and you probably noticed this if you were dealing with foreclosures or short sales back in the day. As a title company, our Bible, if you will, our main document that we have to clear in order to issue a title insurance policy is and will always be the title report. The title report comes from the county courthouse. The city report, on the other hand, is directly from the municipality. It does not tell me that there is anything recorded against the property. I often like to classify as the lien search as undisclosed recordings or undercover recordings. I'll give you an example, a code violation. A code violation is a lien that can then turn into, is a citation that can then turn into a lien that goes into the county courthouse. Needless to say, in a city lien letters, it's going to show me if there's any open permits, if they're going to show me if there's any unpaid water, if it's going to show me if there are any tax deeds, tax certificates, things that are not going to appear on my title commitment. But believe it or not, as a title company, I have to clear my title commitment. That's it. My title commitment has to be cleared. If there is an IRS tax lien, if there is a judgment, if there's a child support case, divorce, if it's recorded in county courthouse records, it has to be cleared. But city lien letters, on the other hand, we can close. We can close with a city lien letter. We have to make sure as a title company, we disclose that there's open permits. And we're going to send you the city lien search. And we're going to tell you agents, listen, there is an open permit for a roof, electrical, whatever it may be, a tiki hut over in a house of PSN. That's great. Everybody awesome, barbecued, margaritas, wonderful. But guess what? There's a permit on it. What are you guys going to do and how are you going to handle it? We leave it to the agents so that they can negotiate that and how they're going to fix that with the seller and the buyer. The seller has an option. They can either fix it, or buyer has an option to say, I'm going to sign a hold harmless and I'm going to assume it. But can a closing be done without a city lien letter? Yes, it can. Foreclosure era, believe it or not, a lot of banks, they never ordered city lien letters. I don't know how many of you were in the REO and the foreclosure market, but I would get calls all the time. Meling, I don't understand, why is my buyer now getting charged with $800 water bill? Well, it should have been collected at closing. Send me over your HUD. I go and I examine in HUD, and what do I find? A lien letter was never ordered. So if a lien letter was never ordered, guess what was never paid? The water bill. Guess what was never taken care of? The permit. Guess what the buyer walked into? A house with a beautiful tiki that wasn't permitted. So I'm when I saw this on the contract, I was like, oh my gosh, yes, finally, now it's on the contract. Now it's part of our legal document. It's on terms. We have to order a municipal lien search. It has to be done. So that's essentially what that section is there. And I'm just reiterating it because it's part of the new contract that was done in 2007. So if you ever want to revert back to the lien search, it's on this section here, 154 through 156. Who pays for it? Marilyn, it would be on your section 9 when you look at the closing costs. Typically, if you're selecting, which now we're going on to the other section, which is all highlighted in green, it's provisions. If you are selecting the Miami-Dade Broward provision for closing, the seller automatically pays for the title report and automatically pays for the city lien letter. So they will pay for both reports. Depending on the provision you select, either seller shall designate closing agent, buyer shall designate closing agent, or Miami-Dade Broward provision, whichever one of those three provisions you are selecting to be negotiated, revert back to section 9, and then it'll give you the breakdown as to who pays what and what reports are being paid by who. I hope that makes sense, because I know sometimes this section here is a little confusing. So the reason why I highlighted it in green is to explain exactly what each provision means on a title standpoint and how you can negotiate it to your leverage when you're doing a contract. So before I start on that, let me just say that Florida is an awesome state. we're a great state. We're a beautiful state, the sunshine state. My son often says we're a bipolar state, but that's just him because he's going to move out of Florida, I'm sure, by the time he's like 18. But needless to say, there are only a few counties in Florida that do the buyer standard paying the title insurance policy. If you notice something, this is a Florida contract. The entire state of Florida has a copy of this contract. But somehow, some way, only Miami-Dade and Broward have made it to this contract on a legal form. That's pretty interesting. The rest of the state usually has the seller paying for the title insurance policy. So usually the rest of the state, I'm sorry, let me just add in some more people that are coming in. The rest of the state will go ahead and always select number 1, which is seller shall designate closing agent and pay for owner's policy and charges. Buyer shall pay the premium for the buyer's lender policy and charges for closing services related to the lender's policy. Usually the rest of the state will go ahead and select this, where the seller and listing agents will always have control of the closing, okay? Keep in mind that in states, in counties such as Palm Beach, Orange County, the listing agents are the ones and the sellers are the ones that usually pay for the owner's policy, okay? Down here, if you go to line 162, now you start getting into the other states, such as the other counties, listen to me, other states. Other counties, such as Miami-Dade and Broward, where now they give the option to the buyer to designate the closing agent. So this one will say, buyer shall designate closing agent and pay for owner's policy and charges for closing services related to the lender's title policy. So let's do a little exercise. If I select here, section 1, seller pays designated closing agent, I'm going to go back here to section 9, and I'm going to see costs paid by seller. And I'm going to look here, documentary stamps, owner's policy and charges, if paragraph 9C1 is checked. So that should already be a charge over to the seller. Title search charges, if section 9C3 is checked. So that means that in this provision here, seller's not paying the title search, but they are paying for the municipal lien search. So Marilyn, to answer your question, that's how you would determine who pays what based on which provision they select. Any questions on this one? So I move on to the next slide. Andres, we're good so far? All right, I got a peace sign. That's awesome. That means we're good. All right, let's go on over to the Miami-Dade Broward provision in Maryland. This will go ahead and answer the question for you. Again, it's Miami-Dade Broward regional provision. So it basically says, seller shall furnish a copy of the owner's policy, and I'm gonna get into that in a quick moment, of title insurance policy, and pay for fees of a continuation of such title evidence, which is a title search, municipal lien search, premium from owner's policy, and buyer's lender's policy. So if you're selecting this here, buyer's getting a lot of credits as far as if the seller has an owner's policy, and I don't know if other title companies may have let you know about this. This is a practice we do over at New World because our goal is to help facilitate and ease the closing process and really be success partners to our agents. If a owner has a prior owner's policy and it is in good standing, we can take that policy, send a copy to our underwriter, and see if they will approve it for a 25% reissue credit. So that means that if the policy premium is $1,500 and the previous seller's policy is in good standing, meaning that there were no quitclaim deeds, there were no changes, transfers of title, there were no exceptions in the policy, hold harmless, whatever it may be. If it's in good standing, our underwriters may approve to reduce that fee by 25%. In addition to that, the seller's paying the title search fee and the seller's paying the city search fee. So you have 3 discounts already for the buyer side if you're selecting Miami-Dade Broward provision. Any questions on the provisions? Because I've already covered the green parts. And again, I'm giving you guys a copy of this so you can always have it handy. All right, let's go down to, I'm trying to move my screen all at the same time. Let's go down to permits disclosure. This is my favorite part too. So if seller identifies permits which have not been properly closed or improvements which were not permitted, then the seller shall promptly deliver to buyer all plans, written documents, or other information in seller's possession, knowledge, or control relating to the improvements of the property, which are subject of such open permits or unpermitted improvements. Bam! There you have it, guys. If a permit does appear on a city lien search, the sellers now have the opportunity to provide any information they may have about this permit to your buyer. This is a new provision. It wasn't on there before. It wasn't on there past before 2017. When I have a case that I have a city lien letter and I see that there's an open permit, the first thing I'm always telling my buyer's agent is, hey, look over the contract, get whatever information you can from the seller. The seller has to have something. Here's the history of it. If a seller is purchasing a property, right? And again, there's exceptions to this rule, and it just really depends on who's closing your deals and how efficient they are in disclosing and really helping you out in cases like this. If a seller purchases a home and there is a tiki hut on there, okay? I always refer back to the tiki hut because for whatever reason, I love tiki huts. Maybe it's because I like lakes too. And they knew when they purchased that house that tiki hut was unpermitted, and it was disclosed to them by that title company. Hey, there's an open permit on this tiki hut. It wasn't closed. Or it could be unpermitted. Hey, you have a tiki hut in PSN. It's not permitted. Whatever the case may be, they would have either one, known about this open permit and signed a hold harmless agreement, or two, would have just said, don't worry about it. It's not permitted. I'll handle it later. Agents know everything about properties. You all should know everything about these properties. You all should be doing your own permit searches online and making sure that your buyers are protected. Because when it comes time for that buyer, now seller, to sell, and this open permit appears about the tiki hut, guess what your buyer, now seller, has to provide? They have to provide proof. They have to provide something to say, hey, yeah, you know what? It was grandfathered in. Listen, it wasn't grandfathered in. You knew about it. You must have either known about it, given it a blind eye, or you signed a hold harmless agreement, and now you're stuck in this situation. So now we need to figure out how we're going to go ahead and get this permit closed, because my buyer is not going to assume the cost of getting a tiki hut. So now that this provision is on here, it gives now buyer agents an added leverage to say, okay, listing agent, there's an open permit. I need your seller, based on the contract terms, to give me whatever information they have. It says it on the contract. What information do you have for me? I need to know, did they sign a hold harmless? Did they know about it? What is the cost? I need you to go to the city and tell me how much this is going to cost. However it is you want to negotiate it. Whatever conclusion at the end of the day the buyer is comfortable with, that's what you're going to go with. They may just say, listen, you know what? I love the house, but it's going to cost me more to fix this permit than I were just to go get another house that already has a tiki hut permitted. Like, why am I going to go through this headache? So make sure that whichever title company you're using, if you're not already using New World, which I hope everyone here does, or at least gives us an opportunity, we do order city lien searches, full city lien searches, and we will send them over to you for you to review. We will also point out there, hey, there's this open permit, there's that open permit, there's this information. We're gonna guide you through the city lien search process. So if you do see those reports, please keep an eye on them and start having that conversation, and always revert back to the contract with it. Any questions on open permits? Because I know that that's always a huge topic, and I know sometimes it's a damper on some transactions. Just any questions, just drop them in the chat. It all goes down in the chat, because I can't say DM because we're not on Instagram here. All right, we're almost done, guys, I promise. Let's go down to section 12, where we're talking about property inspections and right to cancel. All right, guys, listen, this is pet peeve number 3. I've already gone to 2. This is 3, pet peeve 3. Do not wait till day 3 of 5 of your inspection period to order an inspection. Order it right away. Just get it out of the way. Just get your inspection out of the way and order it. Inspectors have time frames too. They have a schedule. They have, other inspections they need to do. So when you have your contract executed, just go right away. And on that same day, call your preferred inspector and saying, hey, I need to go ahead and order an inspection right away for this property. I have 5 days to do it. Because whatever is on your inspection, either the buyer is going to accept it, you're going to negotiate, the seller is going to accept, or the seller is going to deny, and you can cancel. Do not wait until the day after to call us and say, hey, May, I have a problem. The inspection didn't go through, but we're past the closing date. How can I get my buyer's deposit back? I know, moment of silence. So you have to be able to pinpoint all of the contingencies as quickly as possible. Do not wait to get that, because it is going to be very difficult for any attorney to try and justify the delay in getting the inspection done and the buyers getting their deposit back. It's going to be very, very difficult, especially when the proof is in the pudding and you know what, the inspection was done late and there was no addendum. If your inspection is running late, have an addendum field signed out. Do an addendum extending the inspection period due to the time frame of the inspector, or however it is that Andres suggests that you can go ahead and negotiate that. But extend your time frame to give your buyer more time to review the inspection, get the cost that they need, and either move forward or cancel the contract. Okay, makes sense. And I really pick on inspections too, because I, believe it or not, I get calls. That's the inspection. All right, page 6 and 7 is where we start usually our standards. And again, this is just basic information. It's going to go through agent and broker responsibilities, just, what the escrow agent is supposed to do, professional advice, broker liability. This is for Andres. This is where Andres really, hones in on, what his responsibilities are as a broker. And then this part here, default and dispute resolutions. I definitely study this section too, because it irons out what would be considered a buyer default, and then it irons out what would be considered a seller default. With defaults, there's resolutions. So here are some standards on ways that you can go ahead and do a dispute resolution. Most of the times, a lot of agents just contact one of our attorneys. We'll go ahead and review it. We'll do a timeline, like I mentioned before, and see what it is and how we can do it. We'll try to do somewhat of our own mitigation, but at some point in time, this money that we're holding in escrow, we have to send it to the courthouse at some point in time. We cannot keep escrow monies in our accounts forever and a day. At some point, there is going to be a demand for us to transfer the monies from our account into the courthouse, and at which point you're going to start having attorney's fees. So rule of thumb and the best suggestion I can give you when it comes to escrow disbursement orders, or when you're doing in those disputes, is revert back to the contract. Revert back to the contract, negotiate with the other party, because at the end of the day, I've seen it, you'll have $2,000 in escrow, and the only thing that the seller is getting back is $500 and maybe some white hair, because it's a process. So try not to go into these dispute situations. The contract will help you, so as long as you are in line with your contract and staying in line with your contract. There's transaction managers out there, guys, that can help you with this. If you don't know of one, I know of several that are amazing and great. You can talk to them, interview them. They'll help you keep your contract online. Going back to page 7, you have standards for real estate transactions. So that's 18. And this is part of really just your glossary. And like I mentioned before in the beginning, when you go to force majeure and it says section G, well, here we are here, standard G. And it goes into, what force majeure really means. So the first part of the contract, it just basically says, Okay, in the event of force majeure. Now, standard G, guess what? It goes more into detail as to what a force majeure means. A hurricane, flood, extreme weather, earthquake, fire, any other act of God. Some of us will presume that COVID-19 is what? Is an act of God. It's an unusual transportation delay. We can't do a whole lot of things. We can't drive around. There's a lot of things that this COVID-19 has put a stop into our business. So it'll say here, closing date will be extended a reasonable time up to 7 days after the force majeure no longer prevents performance under this contract, okay? But if you keep reading it, it says, however, if force majeure continues to prevent performance, it's preventing performance, right? Under this contract, more than 30 days beyond closing date, then either party may terminate this contract by delivering written notice to the other, and the deposit shall be refunded to the buyer. Can you see how important it is to read these standards? Because these standards give you all of the details that you need to know for every single term of your contract. Make sense? Thumbs up if it makes sense. Lastly, let's talk about time, because I know that this is often a question, and I'm sure Andres gets this question a lot of times. In this contract on as is, if you are unsure or unclear as to how the time is calculated on your contract, the as is contract already has a standard F, which tells you calendar days shall be used in computing time periods. So it's telling you calendar days, month, Sunday through Sunday, calendar days, okay? The CRISP contract uses business days. So depending on the contract that you're using has different time frames for closings. I think for the most part, everybody's already using the standard as is contract. So just know that it's on calendar days. But if sometimes you get kind of confused or you're like, I'm not really sure, you can just go back into standards, okay? It talks about liens, lease information, surveys. You talk about, oh, wait, did I miss this? Yeah, closing location, closing documents, proration and credits. How are prorations and credits worked out? Proration and credits would be anything of HOA prorations, would be anything of tax prorations. How are they calculated? It tells you all here. It's all there outlined in detail for you. And then the last but not least page, let's talk about FRIPTA, because there is a standard definition and provision on FRIPTA. So FRIPTA is basically the tax withholding if a seller is not of a US resident, they are a foreign national. My suggestion as a title agent is, first and foremost, I'm not an attorney. I wish I would have finished law school, but I'm stuck in this, title world, and this is what I know how to do and all I know how to do. But I am not an attorney, and nor am I a CPA. If you have a seller that is a foreign national, consult with a CPA or foreign attorney. It is a must. You must do that. This isn't a should, this isn't, oh, let me consider it. No. You must consult with a CPA or a tax attorney that specializes in foreign nationals. Why? Because there are certain criteria and certain conditions that a foreign national seller has to meet. And it's all under this section here of FRIPTA tax withholding. And there's a lot of if this, then that scenarios, but in a nutshell, if a seller is a foreign national and cannot produce either a social security number, a US taxpayer identification number, or proof of any type of citizenship, there is an automatic withhold of up to 15% of the sales price on their net proceeds, which that money, that 15% will automatically go to the IRS, okay? There are scenarios where a seller can be waived or exempt from paying the 15%. But the persons that will help them do that best is a CPA or an attorney that specializes in foreign real estate, foreign national sellers, okay? There's a process they have to take. There's an application they have to do with the IRS. As a title company, I'm going to explain what our process is so that everybody knows how important this is to have at the time of closing or before closing. If we know that a seller is a foreign national, automatically, right off the hand, on our pre-HUD, we're going to reduce 15%. It's going to be on there. We do not have any information at the very beginning of any proof of certifications or any notice from the IRS that says that this seller is exempt from this 15% or has come into some sort of agreement. In order for us as a title company to remove this 15% from the HUD, we need that proof. We need that letter from the IRS or from the seller's CPA or their attorney that says XYZ seller is exempt from paying that 15%. At which point, with that documentation from the IRS, we can remove the 15% from the HUD. Otherwise, that money is staying on the HUD. We will collect for it and we can put it in an escrow account for no more than 14 days. We'll give the sellers an opportunity to get their documents in line, but that money in 14 days, if we do not have proof that this seller's money was exempt, we're automatically taking it to the IRS. So I need everyone to understand how important it is that if you are working with a foreign seller, start the process on the onset. Start the process when you have that listing agreement in your hands. Don't start the process and don't wait for the title company to call you and tell you, hey, your seller's a foreign national. Do you have the documents? No, you're the listing agent. You should know this information offhand at the very beginning. Hey, seller, are you a citizen of the United States? No, you're a foreign national. Yes. You have no proof of U.S. taxpayer identification. No. Okay, we're going to list your home, but while we're looking and marketing for a buyer, we need to talk to a CPA. We need to get this application done with the IRS to make sure and see if you can be either exempt from paying this 15% or if there's some type of reduction that you can pay. Okay, makes sense. And I'm very big on that because I want to make sure all deals close. I don't like holding people's money. I don't like doing that. Any questions regarding the FRIPTA section or any other section onto the contract? Okay, and I'll just wait for the comments to come in. And then last but not least, you have your additional terms page with your addendas. Please make sure you're checking off the addendas that pertain to your contract. If you notice here, there is a short sale addendum. We haven't gotten into the short sales yet. There is another short sale class that I do teach. I'll be happy to teach that for you. It has a lot to do with this provision here. Actually, one of the most important provisions and addendas you want to include into your short sale contract. And then any other here, you see you have pre-closing, post-closing, you have all these addendums. Please put it on there. Let the title company know. This is important for us to know. We have to be able to know what you're doing as far as pre-closing or post-closing, if you have a seller's attorney approval, if there's a lease purchase or lease option. These are important to have on your contract. And then lastly, your signature page, where you have the buyer, seller, the signature, seller signature, buyer information, listing broker, selling broker. A tip that I usually give my agents is when you draft up the contract and you're here on your corporate sales associate, listing associate, put in what your commission split is. The MLS will say one thing, and it's happened a lot before previously. And this is why I started training my personal agents saying, listen, do me a favor, just put what you negotiate on the contract, because you can have 6% on the MLS. A standard in any title company's mind is always going to be 6%. Remember, we don't have access to the MLS. So it's not like we can log in and we can tap into the MLS and see what the commission is. We rely on the agents to give this information to us. So if you're not putting what your commission split is, it's going to be on the HUD as 6%. Always going to be 6%. 3 to the buyer's agent, 3 to the seller's agent. If you are negotiating your commission for whatever XYZ reason to make the deal happen, whatever the case is. Let's say you go from 6% to 5%, put 2.5 on the section where it says corporate sales associate and listing associate. So the title company knows and we can collect the correct commission at closing. And we're not sending you a HUD with 6% on there and then everybody's screaming at the closing, like, what are you talking about? That's the wrong commission. You know, you gotta let us know. Remember, we rely as a title company, we rely a lot on what agents are putting onto their contract. It's just some good helpful tip and some good insight for drafting the contract and getting the closing documents correct. All right, guys, so I'm going to stop my share. This is the end of my class. I'm back. Hey, guys. Any questions? I know there was a lot of information tied into about an hour and 15 minutes, I think. It's a lot. The best suggestion I can give you is set the expectations, communication, and knowledge. When you do have a contract, get into the habit of just saying, hey, buyer, here's a copy of the contract, and I want to get on a phone call. I want to get on a Zoom call. You can do a video share. You can do a share, just like I did today, and go over sections and certain sections of the contract and make sure that your buyer understands that. I'll leave it off with this. The best analogy that I can put this in is if you've ever been into a closing and you're astounded, you know, you're sitting there and you're looking at the signing agent and all they're doing is saying, here, paper sign, and you're like, they're not explaining the closing documents, but this is like so, like, just so weird. Like, why wouldn't they explain the closing documents? Stop for a second and think back to when you first met the buyer. Because remember, this transaction starts with you. It ends with us. If you are not setting the expectations from the very beginning, meaning if you're not going over paragraphs and you're not going over sections of the contract that your buyer, a legal document, your buyer is signing from the very beginning, why would you be upset at a title agent that does the same exact thing that you did at the very beginning? Food for thought. Not only that, it's helpful. It shows your consumer and it shows your buyer that you are a professional. You're here to help them, not only with this transaction, but with other transactions. And they can refer their friends to you and saying, wow, you know what? Andres really helped me. He really helped me understand the contract like I've never understood it before. I didn't even know there was such a thing as diligent effort and good faith on the contract. Now I know. So those are just little tips. I will share this recording with everyone. You can have it. And then I will send, Andres, I'll send you the link. So I just need your email with all of the slides so that everybody can have a copy and refer back to it. And let me check some messages. I have about 7 here. Okay, Angela, yes, we will send you a copy. Oh, you're welcome, Katie. Appreciate it. Yes, Gustavo, I'll send you a copy there. And copy of the contract, yes. Someone had asked me about short sales. I will be setting up a class for short sales. Laura, when is the short sale class? I will be setting up a class shortly, probably sometime next week, maybe Wednesday or Thursday. I'm not sure yet. So I'm going to unmute everyone right now.
La dirección para activarlo, pues.
Everyone's unmuted. Entonces, if anybody has
Darlo del temporary y ponerlo activo, pues.